Hello, listeners, and welcome to this week's Metals and Markets Wrap. I'm your host, James Anderson of sdbullion.com. With us this week is Lewis from Smaulgld. Lewis is a returning guest, and thanks for coming on, Lewis.
Well, thanks for having me back, James.
Yes, and today, just so people are listening out there, it is Friday, September 21st, 2018. We're starting this interview at 11:08 a.m. Eastern Standard Time. Lewis, we had a little brief pre-conversation before we started, but we have a few charts we wanted to go over. I think probably the most interesting thing that you've covered this past week on your YouTube channel was the net positions for silver COTS, which is, it's a subject that's always covered in this industry. And I thought you had some pretty interesting analysis. Plus, you did some heavy work there on that chart with all the numbers and such, which I will definitely put in the video that we're going to be uploading after this interview. So maybe if you could take it from there and give us some of the insights that you got from that chart.
Okay, now I am not a COT follower. As such, I don't follow the charts. I do look at the numbers from time to time. But when I heard the story that the commercials were net long for the first time, I wanted to dig in and see historically where they had been. So when they say net long, there's a number of them. There's 20 or so, I don't know the number of them, and they take their net position. And Nick Laird at Gold Charts or Us does a great job of not just pulling the daily data, but then putting it into these wonderful charts. And so I went back and I wanted to look at the last couple of years of the net positions of the commercials and non-commercials. And then there's these non-reportable, so it's hard even to tell. So that's why I don't pay much attention to the chart, because I can't really tell who's whom in the chart. But there is, when you see the chart, a very recognizable pattern that there's always a group of commercials that are net long, and there's always a group of non-commercials that are short. And I was looking through the period, and I batted it down into these periods where you see as the price rises, one group goes long and the other group goes short, and they unwind their positions. And then another trend starts as the price goes down. They flip their positions. One goes long, the other goes short. And you have this up and down and swapping of net positions of long and short of both the commercials and the non-commercials. So when this historic period came in where now we have the commercials net long, I wanted to see, well, why would that have happened? And this is just a theory. If you look at the chart, this is a very long period of time. Goes back to, it's at least 6-7 weeks where the price of silver has been falling. And you can see the normal unwinding of the positions as they're making money on the long side and on the short side, both going up and down at the same, it looks like at the same ratios. And then you see where they intersect. And so far, I'd like to see what happens today when the report comes out. It looks like they just intersect and they start, one gets to the point the shorts end up having to go long just because they've been short for so long, and then the longs have to go short because they've been long so long. Now, if the price, what I'm thinking is if the price now continues to rise, which it has this week, now we might see them start to swap out again. And that's what, if you go back from 1 to 10 on the chart, you see that's what happens is once they hit a certain range and they've been long or short for a period of time, they then switch their positions. Now you see it looks like it's kind of happening already as the net long position for the commercials has already shrunk from the week before, and the net short position for the non-commercials has shrunk as well. And I would expect if the price continues to rise, then the non-commercial shorts will start to go long again, and then the commercials will start to go short again if the price rises further.
Mm-hmm. Yeah, and just looking at that chart, I think there's this ongoing meme that, at least for the last few years, it's always been that, the non-commercials are the morons and the commercials are always right and they always make money and the spec non-commercials always lose, which doesn't really make much sense when you look at the various numbers that you've plotted on this chart, especially looking at number 5 back in late 2016 when we had silver touching near $21.
They were long. They were increasing their longs going into that peak.
Correct. And then, the price went down. It just, if you go and correlate, the different plots that you put on, it doesn't necessarily mean always that is the non-commercial nets are rising, that the price of silver is all of a sudden going to be smashed. It's not true. If you look at number 4 on the plot of the chart, the net from there on to number 5, you basically have the non-commercials increasing their long positions, and the price of silver is rising. So they were making money throughout that entire time.
Right.
So it just doesn't correlate. And so go ahead.
Well, what I was going to say is where it really strikes us is, and I think Craig Hemke covered this, back in March, you had a position where everyone was short. And I wanted to see why that was. If you look between 10 and 11, my theory is it's because the price was flat. Nothing was happening, so they weren't increasing or decreasing their positions. You can see that spot where I've circled it. You've got the commercials and the non-commercials all below the line, and then you see above the price is pretty flat, so they were looking for direction. And then you can see that when the price finally breaks out a little bit to the north, then the non-commercials go long, and the commercials go short. And then you see finally you get a definitive position at number 11 where it's going down, and then they both pick up their positions. They take their stakes as long and short, and then they unwind them or they increase them.
Mm-hmm. Yeah, and I was talking to David Morgan a week or two ago, and he was talking about the COTS and how it's not as useful as a tool as it used to be. I guess he was explaining to me that before the SLV was introduced in, I believe, 2005, 2006-ish, the COTS were much more reliable way to kind of gauge trading. But he says now that so many derivatives have gotten in play, it's very difficult to understand really what's going on behind the scenes, because you have so many various machinations of places people can get exposure to silver and gold spot prices.
So you're saying it's not just the COTS that's influencing the price; it's those derivatives off the COTS that are causing it to.
Totally.
Yeah, well, that makes sense from David's point of view.
Yeah, and I totally agree. That's why the COT thing is kind of, it's definitely something to look at, but I don't necessarily think that you should take too much out of it as far as what's going to happen in the short term.
Yes, because what Craig was saying in that period that's circled, that was the setup for a bullish rise, and it didn't materialize. You could see that.
Right, exactly. Yeah, we've basically been bleeding from 17 downward to 14 now. So moving on, I think we had swapped a couple charts. I figured we could start with India, if you like. I think they updated their imports for both gold and silver. So I suppose we could start with gold. Obviously, India is a large gold importer. They when you talk about physical demand, a lot of times people talk about central banks and all this stuff, but truth be known, it's really India and China that have the most physical demand for gold. And it's obviously, for the large part in India, it's mostly about jewelry. And so I think, since July has been updated, they've imported 440 tons of gold. So they're basically on pace for, over 800 tons this year, roughly.
Sure. Now, that's one of the points I like to make all the time is that people get excited about central banks, but really the only central bank that's buying gold is Russia on a consistent basis. Turkey has stopped buying gold. They're in fact selling it. Kazakhstan adds about 3 or 4 tons a month from its own domestic supply, so that's not that much. Russia, however, does and indeed adds 80 to 90% of its domestic mining supply to reserves. They're on pace this year to do 240 tons. We did 1 million ounces in August, 31 tons. But India is the big one, so is China, because India over the past few years has had many years in which it's imported over 900 tons. 2011, they imported 1,079 tons. As you mentioned, this year they're on track to probably do over 800 tons. So you could see the big degree of difference there. Also, because India has no domestic gold mining production, although they're going to get some soon, I hear. But for decades, they had no working gold mines. They rely solely on imports. So if you're considering what's going to import gold flows, India is the place to look because they're importing a lot of gold. China, through Hong Kong, we get those numbers. They're importing a lot of gold. Russia doesn't impact the gold flows other than that the gold that they're mining isn't probably leaving their borders. Now, we have Nick Laird produces the Indian gold charts, and he gets the numbers directly from the governmental website. And as you mentioned, The numbers for July now are in, and I think there were 74 tons, which is a nice number. And we're through the year, according to his chart, we're at 440 tons. However, someone over at Reuters manages to get the numbers in advance for the more current months from the government. They're non-official, but I've been tracking them for over a year and a half, and they're pretty much spot on. They're saying in August that India imported 100 tons of gold. So that really puts them on a big pace. Now, there's also talk in India about increasing the duty. There's talk about taking away the duty. And the problem with India government has is that Indian gold imports screw up their balance of trade because they end up being Nick Laird, the Lord of Charts, also does a great job of putting that together. And he shows that some months that Indian gold imports make up 8 to 20% of their overall imports. So you can see that they don't like that. And also to mention on India, India is a top 10, the Reserve Bank of India is in the top 10 of gold holding nations and recently has added about 15 tons of gold to reserves the last couple of months. So they're at like 573 tons. However, they say that within the borders of India, with the individuals owning gold, the rural farms, and the temples, there's between 18 and 22,000 tons, with most of it being in the hands of Indian farmers. And a lot of it's not in American gold eagles or bullion form. Most of it's in, as you say, jewelry.
Mm-hmm, correct. So basically, it's pretty safe to say like 1 out of 7 ounces of physical gold in the world is sitting in India, and that
right,
that makes a lot of sense. And the fact that they're consistently buying it, I think people who've never lived in India, I've never been there, but I've heard people really treat it as a savings account. They see a long term trend for it. They see the rupee devaluing over time, and so a lot of farmers may use it as a way to store value over the they basically hold it as a way to get from one season to the next. Maybe silver is probably getting treated the same way. I imagine that's why there's silver imports. We can go ahead and move on to that chart, I guess.
But before we do, there's a governmental program in India to try to have. They first tried the gold monetization plan, where you would get interest on your gold if you gave it to the government. No one went for that. Then recently they announced a plan to offer gold savings accounts. If you could trust this, you hand over rupee and they tell you that you have a certain amount of grams on account. So they understand. They have finally decided they're not going to be able to wrest the gold from the people. They're going to try to cater to their gold-loving predilections. And also, there's a digital company there that also offers a gold money type of program that's pretty popular. You can buy gold, physical gold, on your cell phone. There's a pretty big gold culture there.
Yeah, it'll be interesting to see if they'll fall for any type of derivatives. Basically, I'm not sure. I think a lot of Indians they don't really trust their banking system or financial offers. A lot of times that's why they get it physically in their hands. So it'll be interesting to see if there's any pickup in some of this stuff, maybe from the younger generations, possibly. So moving on to Indian silver imports, this year it looks like the silver imports for India are going to be rather large. I mean, it's on pace to eclipse probably 7,000 tons. Through July, we have now 4,127 tons updated of imports, and that in ounce terms is over 130 million ounces, right. And that's like 90% of the JP Morgan Comics warehouse, and they did that in 7 months. So it's just some perspective out there for people who follow this industry to just kind of keep things in perspective. Know that India is really a big silver gorilla, at least in the physical market.
No, it certainly is. And the thing about Indian silver, again, there is an industrial component because they have some of the largest solar plants. They don't have the production the way China has, but they have in place some of the largest places to generate solar power in the world. Also, they have opened up the world's largest cell phone manufacturer for Samsung, which was going to require a lot of silver in those electronics. And then, of course, you have a rising middle class, both in number terms, just gross number of people. I don't mean gross, just bigger number of people, and then also in incomes within that group of people. And with the price of silver being low, people like to show off their wealth. And if you're not the wealthiest, you still can show off some wealth and have jewelry, and silver becomes popular. Now, one of the interesting things about Indian silver imports is, and it's similar to the gold imports, is that the years in which they recently have added the most is when the price drops the most. So back in 2015, when they bought about 300 million ounces, 8,500 tons, that's the year that the price hit rock bottom. That was also the year they were working on one of their large solar plants, but that only took 70, 80 million ounces overall. They were buying it over 3 or 4 years. But this year looks like it's going to be another big year, and we have a similarity, and the prices are now dropping. You'll notice in 2016, India took a break from their silver buying. They went from 8,500 tons down to 3,500 tons, and I chalked that up to either they had bought all their silver the prior 3 years, or that the Brexit and the other issues that drove silver up to $20 made them hold off. So Indians on the domestic side for jewelry are price sensitive, and it makes sense because unlike food or other commodities like oil, you can delay a purchase of gold or silver. You don't have to have it right then and there. And I think that's what happens when the price of silver or gold goes down. It's on sale, they buy it. When it goes up, they hold off. Now in America, it's kind of this. It's not the reverse. It's both. When the price drops a lot, you're seeing. We can talk about what's happening. SD Billy. When the price drops, people pour in, and also I think when the price starts to rise a lot, people pour in on the fear of missing out. I think the worst part, your sales, if you go back to that chart we were looking at, the COT, where it was pretty much flat pricing, and both the commercials and the non-commercials were short. I bet you that's when your sales were the lowest because the price is flat. There was no movement in either direction, and people don't get excited about that.
Correct. Yeah, volatility, either to the downside or the upside brings, buyers, and to the downside, it brings more buyers that are experienced, that have been through this, that have been using this as a dollar cost averaging way to save bullion, and so they see it as great discount at a great price, and they want a dollar cost average lower, and they come in and buy. So that's what we've seen a lot of late. A lot of very experienced buyers. There have been some new buyers coming in, buying at these prices, which is encouraging to see that there's new people coming into the market. But typically, new people coming into the market, my experience over the last decade, has been that they like to buy when the price is going up. They want to feel like they're getting into a warm pool almost. Like, yeah, this makes sense. I'm not crazy for doing this. And it's kind of validation to keep seeing the price rise. They kind of feel like, oh, I should buy it now before it gets away from me. So it definitely, both ways it happens. It just so happens that my most recent experience has been seeing it go to the downside. But I definitely remember back in 2010, 2011, when the prices were going up, you definitely had the newer buyers coming in and wanting to get in the warming pool. It's just kind of human psychology. I don't know, but that is really what happened back then.
And today, when people are buying, are you seeing across the board all product pickup, or is it focused on American Silver Eagles, junk silver, generic rounds, large size, small size? Where do you see the pickup when you do see a pickup?
It runs the gambit. I think there's a certain, percentage of buyers out there who just like Silver Eagles, but the more experienced buyers, I think, as they've been in the market for a long time, a lot of times they may start with Silver Eagles because it's kind of the Apple of the industry. It's the one that everyone looks at as the number one product. But as time goes on, they see the price premium for Silver Eagles and don't see it as good value, and they start to switch over and start to move into lower premium products like Sunshine Mint products or Silvertown, or what have you. Whatever private mint is making, rounds at prices that are less than $1, per ounce over spot, they see that as good value and they come in and buy for that.
I know what I wanted.
There is a small. Go ahead.
Well, I wanted to ask you about the Sunshine Minting I understand from one of the interviews that Doc had done about um, American Silver Eagles shortage in 2015 is that the U.S. Mint takes doesn't make the silver blanks there. They buy them from three third-party vendors. They buy blank 1 ounce silver rounds, and then they stamp the lady on the front and eagle on the back. And one of the suppliers was the Sunshine Minting Company. And I don't know who the other two are, but I would imagine if the Sunshine Minting Company couldn't supply the U.S. Mint, I was wondering if Sunshine Minting products were also sold during those last 2 weeks.
Yeah, that is correct. This week came out that Sunshine Mint is not taking orders for their private mint products at least until November. So what that basically means, just reading into it, is that Sunshine Mint's probably working 24 hours a day, 7 days a week, busting out blanks for the U.S. Mint, because I'm sure the U.S. Mint knows that if we have prices go down further for silver spot, if we go to 13s or the 12s, it's only going to exacerbate the amount of demand. So they definitely have Sunshine Mint, I think, working 24/7, busting out blanks, so they have enough supply to meet demand. That I think is what's happening. And so if you look out right now at SD Bullion and you look at the various private silver products that are there, Sunshine Mint products, a lot of them may be sold out, or they will be sold out soon enough, because by November, if the prices are going down, you definitely will see a lot of value buyers coming in.
Do you happen to know, only if it's public knowledge, who the other two private mints are that supply the U.S. Mint with the blanks?
Yeah, the one, I believe one is Perth Mint has helped out from Australia, and I'm not sure, and domestically, if there's any others that the U.S. Mint leans on for silver. I definitely know that they do on gold. They work with the company out of Boston that's owned by Berkshire Hathaway. Yeah, and I forget the name. It's not coming to me off the top of my head. And there's a couple others. I think I tweeted it out about a year ago when I found out that information. But I'll try and find that tweet, and I'll put it in this video, so at least you know who the gold planchette suppliers are. As far as all the silver planchette suppliers, I'm pretty confident that Sunshine Mint is the most substantial supplier at the moment for the U.S. Mint, and hence they're not selling any private products, at least until November coming up.
No, I know the Perth Mint took advantage of the fact that they actually were suppliers, and that's when they introduced the 2015 Australian Silver Kangaroo, which was a big hit because the U.S. Mint was out of Eagles, the Canadian Mint was out of Maple Leafs, so they're able to just print a new design on a coin and ship it out the door. That coin's been pretty much a big hit. It hasn't ever got to 3.5 million sales in a given month, but it's managed to has a niche now. It sells the last couple of months, the last couple of years, probably an average over a million a year, a million a month.
Yeah, no, that's there's definitely, working in this industry and with international buyers too, there's definitely a good percentage between Australia and Canada of people who understand the mining industry. They understand the precious metal mining industry, because obviously there's companies in their respective nations that do a lot of mining. So there's a general proclivity, I believe, with investors in both those countries to have a better grasp and understanding of precious metals than, say, the United States even. So it doesn't surprise me that the Kangaroo was A, successful in 2015 when there was no competitors, and then B, is continuing to have success because you just have a proclivity in Australia of people who do buy bullion. So
I also understand that there's a lot of Chinese buyers. It's hard to detect how much they're selling to China. But one thing was interesting at certain points, and I've done charts in this, maybe I'll send them over to you, where the Perth Mint, for the first time in the last couple of years, has actually outsold the U.S. Mint both for gold and silver. And it's a far, far smaller mint. And that shows how low the demand was, U.S. retail demand. And I don't think the Australians were the ones picking up the slack to be able to out sell the U.S. Mint. So there had to be some foreign demand there as well. And I do know they ship. So, and also I've heard just anecdotally that at the Perth Mint they do get Chinese tourists. So maybe they go there and they stock up before they go home.
Yeah, I definitely have seen videos where the Perth Mint talks about supplying China physical demand, and I believe that's their largest customer is the nation of China. I don't know exactly which entities. It's probably their sovereign banks or who knows which are buying the physical gold from the Perth Mint. But I believe that is their number one export is going to China, just based on some of the evidence that I've seen on their website.
Now, I want to ask you about the pandas, the Chinese gold and silver pandas. I used to see numbers on how many they made, and the silver panda was always a low mintage, sometimes a few 100,000, and then up to recent years they're making 8 million. I don't know if they still make 8 million of them, but then they changed both the panda and the gold and silver panda to a metric system, 30 gram as opposed to an ounce. But did you see the story about how they're selling or trading the Chinese gold pandas on the Shanghai Gold Exchange?
I did see that came out this past week.
And
That now go ahead.
I just wanted, I don't know much more about it. I was wondering how does that work? Or is it something where you buy them and you store them or you take delivery?
I believe it's similar to COMEX. Like if you look at a COMEX contract for a silver future or a gold future, there are certain products that you have to use if you want to actually deliver it physically and comply with what the rules are. They have COMEX approved different types of hallmarks or bar mints. So, for
Right.
instance, like a Royal Canadian Mint bar is accepted by a COMEX for COMEX delivery, but like an Elemental silver bar is now after the big scandal that went on with them, it's no longer it's no longer
Right.
accepted for a COMEX delivery. So, I think it's that. I think it's similar to that. It's what is acceptable for physical delivery, and the fact that finally a coin is now accepted at the Shanghai Gold Exchange is pretty. It's relevant. It's very interesting. It probably will increase some of the demand over there because, in general, I think the Chinese they like smaller increments.
Right. They go for those kilo bars instead of the larger bars. Right.
Correct. Yeah. The 400-ounce gold bar, that was a central bank tool. That was something that larger entities would use for trading and physical delivery. But now you have a lot of individual investors, and kilo bars is the standardized size product. And I bet if you talk to them that they would think, if they were smaller, if they were a tinier entity or a smaller investor, they would definitely prefer, I bet, to have gold pandas delivered instead of a kilo. That way they have smaller increments. It's just easier to sell smaller increments and use in various
Yeah, well, it sounds
ways.
like it's an important development because you mentioned the COMEX, you have to have, was it the 400 ounce 995 bars. And here you're now having a tradable item, which is considered a standard at 1 ounce, at 30 grams, because the American Gold Eagle is not tradable on the COMEX. Silver Eagles, even in monster boxes, are not eligible for delivery. So I guess it's a very important. I'm just wondering if they take delivery of their contract in the gold panda at some point.
Yeah, that would be. It would probably. It'll be interesting to see how successful that'll be because if you just look at the premium of a kilo bar versus say buying 31 odd ounces of gold pandas, it's obviously going to be a smaller premium for the gold kilo bar. So it'll be interesting to see how successful that is. It may offer up the opportunity for many or smaller contracts, even smaller than kilos. Eventually, maybe they could do a 10-ounce contract or a 300-gram contract.
Well, the reason I asked about that is because, as you mentioned, the mini, they do have the mini silver, but there's not a delivery option.
Mm-hmm. Correct. That is correct.
So maybe there's not a delivery option. It would be interesting to see. I know the guys over at was it Bullion, the ones in Singapore cover that market a lot. Coase Jansen and Ronan Manley.
Oh yeah, Bullion Star. Yeah, those guys do a good job.
Yep.
All right. Well, moving along, you did mention about Russia. They took a million ounces of gold this month for their central bank, which is a pretty large amount if you look at the chart, and I'll put it in the video for viewers to see. Obviously, if you look at the chart, it's since 2004, 2005, 6, 7, they pretty much started ramping up their gold buying program over in Russia. And I sent you another chart just to kind of back up, the fact that the Russian ruble is still, when you look at official gold reserves, the ones that are transparent that people report consistently, the Russian ruble is still the most gold-backed currency at the moment. I mean, obviously you can't exchange rubles for gold, but if you break down the total M0 supply of rubles versus their official gold that's in the central bank, it would only take roughly a $2,500 an ounce gold price to back up all their rubles with the gold that they have in their central bank holding. So
Right, and another way of looking at that is that they have overall just reserves, which aren't just ruble reserves. There are obviously some dollars and other currencies and securities in there. But if you look at their overall reserves, they're at about 460 billion, and their gold reserves are worth about 77 billion, which means that their reserves are about 17%. And they've reduced their U.S. Treasuries from they used to have about 100 billion in them, now they have 15 billion. So yeah, the gold reserves are an important part of the Russian central bank, and they've done a very prudent job over the last few years, especially given that their economy's taken hits and also their currency has taken a hit. And unlike Turkey or Iran or any of the other countries that don't really have sound currencies, they seem to continue to add to their overall reserve positions. They've gone from like 380 billion at the beginning of 2016 up to about 460 billion. So they've increased their reserves and they've increased their gold reserves. So they're not at the point where they have so much debt where they have to sell off their gold like Venezuela or Turkey to make ends meet. And you would think that their currency would be doing better, but it's not. And also, they have a lot of oil too.
well, of course, yeah. I mean, Russia has all types of various minerals in their ground, and so I mean, when you look at like platinum or palladium, they're one of the biggest
Yep.
suppliers of both those metals. Russia has a lot of minerals. There's no doubt of that, and this is it's a pretty interesting chart just to see that they are being very prudent. The central bank there is not going into debt. They have a lot of reserves, and a good portion of them are sitting in physical gold. So it definitely looks good for Russia in the future, the way they're sitting right now.
I got another question on coins. Platinum and palladium coins, are they in demand? I know that US Mint just came out with a palladium coin. They've been selling platinum coins for a while. Is there demand for those coins?
Yes, there is. This week I actually was asked for the first time to help out in the shipping department, and it was because we have all hands on deck trying to get out products to our customers, and we have a big backlog of orders. So I spent a full day there, pick packing and shipping, and it was a really really good experience. That was the first time I've ever had to do that, and it was good, a good experience to do. And there were a lot of orders, to be honest, where I saw small 1 gram platinum bars going out the door. And I think people look at platinum right now and they see the fact that it's cheaper versus gold than perhaps ever, at least in the COMEX era, in the era that the COMEX NYMEX has been trading gold and silver. If you go back in the charts, platinum is as cheap as it's ever been versus gold, at least in the fiat currency era since 1971. So, yeah, I think a lot of investors see a lot of value in platinum. And so there is some demand. When you talk about overall volumes of sales, it's 1 to 2%. It's not even a huge amount. But as far as there are some investors and they are coming toward platinum, and on the other side, palladium. If you look at all the 4 precious metals right now, the chart of palladium is the most bullish by far. Obviously,
That's the one you wish you'd stayed with for the last 10 years.
Oh, by the way, rhodium too. I bought some rhodium,
Yes.
and I just realized my rhodium that I bought a few years back has doubled, or more than doubled in the last few years. It's not a chart I look at often, but rhodium is one that's very bullish at the moment as well. And for those out there that don't know, rhodium at one point got to $10,000 an ounce. I think right now it's at $2,500 an ounce, and that was when it got to 10,000 was I think in 1990s, early 2000s. So there are moments in time where bubbles form in both palladium and rhodium, and it appears to be, if you look at the charts, it could be setting up for another situation where either of those metals go into some type of mania. So they're both very, very interesting precious metals, and the palladium one I thought was pretty interesting. There's a guy out on Twitter who I've interviewed before, David Jensen. He's been tweeting a lot lately about palladium and writing articles about it. And, what he's trying to show is the fact that the LBMA is, they're basically caught right now with their pants down, not having enough physical palladium to cover a lot of the demand. And the lease rates on palladium, I think, are at 16%, which is very, very high for precious metals to have a lease rate in double digits into the teens. So, it's interesting to see, when you look at the charts, that is the one that looks the most bullish. It's over $1,000 an ounce. It's very rare to have palladium more expensive than platinum.
And very rare to have platinum below gold, which it has been for a few years now.
That's totally true. So, you have a weird situation where palladium could, be the first precious metal to kind of break out, and maybe, just maybe, it could help bring up the other metals and get some interest into the sector.
Well, there is the idea of the ratio being so out of whack, I think, is very important for gold platinum, because platinum comes out of the ground at a ratio 10 times less than gold. And then I always talk about relative rarity not being dispositive, because we have the same issue with silver. But at some point, there should be some normalization of that ratio. And right now, gold is trading at, I keep this daily, like 150% over the price, 145% over the price of platinum. And if you look at the longer term charts, there's time periods where platinum was clearly 100 and, let me go back here, it looks like the platinum ratio used to be well above gold. At one point, platinum was over $2,000 as well, when gold was much lower.
At that point, that's probably double what gold's price was at the
Right.
at the same time. So there's definitely that was, I think, in 2008, where platinum was over $2,100 an ounce, and I think that there was some supply issues with Russia, and it drove a big mania in that price as the commodity bull. Go ahead.
Oh, the other place where there's only one other place, and that's
South Africa.
Yep. That was 2008. You're right. It went to $2,200, and gold at the time was about $800. So it was even more than that.
Oh, I mean, it's interesting that you can have these out of whack ratios happen, and I think people see platinum at $800 and they're thinking, or 900 or whatever it is today, and they're seeing it as good value. So, I mean, you see people, they see it as a diversifier in their precious metal portfolio, perhaps, or just the fact that there's just so little of it. I mean, if you stuck all the physical platinum together in a cube, this is something that people talk about all the time, but if you grabbed all the platinum in the world and stuck it in a cube, it'd fit inside a regular house pretty easily. I mean, some people say garage. I don't know if that's true or not, but definitely would fit inside a median house in the United States. That's how small a cube it would be.
Well, let me give you some numbers here. Russia just added 200 tons of gold in 1 year in 2017. The entire global mining production of platinum in 1 year is 200 tons. And as we know, gold is like 3,500, 3,600 tons. So it's a massive amount. And there's an ETF. They have like 3 million ounces in a ETF, and that's like a year's worth of supply. So there's not much above ground. And the other thing is, I know that they use it for jewelry, which is kind of strange, because if you've ever looked at platinum and jewelry side by side, I guarantee you would think silver was the more attractive looking metal. It's much shinier, but the Japanese and Chinese tend to like that platinum because it's a status symbol. But I've read in recent years that the Japanese have gone off platinum, and then also because of the catalytic converter reduction, rise of electric cars, reducing of diesel, that's reduced demand for platinum. But now there seems to be this investment side to platinum that's picking up some of the demand slack.
Yeah, and with the increase in cars maybe in the future being electric and that they drive themselves, I do think there is a lot of use in the batteries for platinum. So I think there is a good case for platinum in the future, still being a very highly regarded precious metal and something that's very expensive, and likely at some point in our lifetimes we'll see it go above the price of gold again.
It's also impossible to counterfeit. Did you know that?
No, I did not know that.
Here's why. Gold you can counterfeit with tungsten because both metals have similar densities, and then you just plate over the tungsten. Platinum is more dense than any metal on Earth, so you can't do it.
That makes sense.
Your platinum coin is smaller. Yeah, you can't add lead to it or anything.
Right. Nothing would weigh that heavy because it's the most dense. I do know that platinum, for instance, when the Europeans came over to settle North America and South America, and Spaniards came over to find gold, while they were searching for gold and silver, they would get platinum a lot of times from the mines that they were pulling it out, and they saw it as a nuisance because they didn't have fires hot enough to burn to melt the platinum. I believe platinum needs 3,000 centigrade to melt. And so it was more or less seen as a nuisance when they were mining for gold or for silver. As well, platinum at the time, I think in the 1800s, and some of the research I've done, was used as the metal they would use to counterfeit gold pieces. So they would, instead of tungsten back then, they would use platinum as the insert, because they thought platinum was useless. And it wasn't until late 1800s, early 19th century that we finally got, burners that could get hot enough to start melting it and studying the metal and understanding its properties, that we actually started to value it and see it as something that we could actually use in industry. And that's why, platinum, if you look back far, it was basically valueless. And then to start finding what platinum prices were, say in 1920s, 30s, 40s, that data is out there, and you'll see it pretty cheap when it first started. And it wasn't until about the 70s where it started to get traded on futures exchanges that platinum's price started to rise.
It's interesting. Aluminum had a similar history. Aluminum was really valuable when they first discovered it in the late 18th century. And there's a story, I don't know if it's true or not, but they said that when Napoleon served his primary table with all the best guests, he gave them this new stuff, aluminum, aluminum cutlery and aluminum drinking goblets, and the others had the gold. So, and now aluminum is really cheap.
Yeah, did they get sick from all the heavy metal poisoning?
I'm sure it wasn't the best thing for them, right?
Yeah, aluminum is something that people don't want in their deodorants these days. And so there's a big trend of people wanting deodorant without aluminum, because aluminum, I believe, has the ability to give people Parkinson's if you have a long-term exposure to aluminum. So it's heavy metals will screw up your brain, essentially, is the bottom line.
And last question for you, copper. Do you guys sell copper?
We do sell copper, and it's not a huge percentage of our overall sales, but people do like to buy copper. I think a lot of times people buy copper because they feel like they're getting a lot of value for weight and heaviness for what they're buying. The premiums on them are much higher than the other precious metals that we sell. And then you also have a good portion of the population out there who just searches through old pennies and finds the pre 1982 pennies, and they hoard those as well. But there's an argument to be made that copper was the third of the three monetary metals in the United States, and some people think that copper could go up in value. And you hear that kind of stuff, or people hoarding nickels and that kind of thing. I think Kyle Bass at one point hoarded nickel.
Yes. Well, a nickel is 5 cents no matter what, and it can have at any given time a metallic value over that.
Right. There was times in the last few years where nickel prices were so high that you could melt your nickels in your pocket and get more in melt value than the face value. So,
yes.
And
currently that's the case with the copper ones, the pre-1980s.
That's totally true. Yeah. And it's definitely illegal to melt copper and nickel coins if they're U.S. Mint struck.
Yes.
I do know that is illegal, but you can bet that if there's a profit to be made, it will be made. And that happens a lot of times in third world countries, like for instance, in Argentina. There was a big issue with a lack of coinage. People were handing out, candies and matches as their change instead of getting, any actual pieces of money.
Right.
Because in the black market, they were melting it down and selling it to industry. It was worth more in melt than it was in the face value. And so you had a big black market out there that was taking all the coinage out of circulation because, the face value was that debased.
Yeah, you can't really change the numbers on there as easily because it's still going to have the metallic value over the paper.
Correct. It would be a lot more difficult than just, issuing new paper notes. Well, that's it. I think for this week. Is there anything else we wanted to cover? I wanted to plug your channel. I do appreciate the fact that you're doing that every day. You're putting out information and news in the financial industry and mainly precious metals on your channel. So could you tell the listeners out there how to find you?
Oh, thank you. What I've been doing with James was referring to for the last few months, I've been doing, rather than trying to come up with a blog post topic and then write it and do the charts, I just pull a few charts together. Either I create them or I take them from Nick Laird's Gold Charts Are Us. And I go online and discuss briefly the events of the day every night at 8 o'clock on YouTube. And it's generally a gold, silver, sometimes cryptocurrency discussion. And I talk for about 15, 20 minutes, and then we have a discussion in the sidebar. And it seems to be working out. We're getting a decent number of people tuning in every night. So if you miss a night, you come back the next night. And then what I do the next day, James, is I put all the charts on the blog post so you don't have to wait for the chart you want to see to come up on the video. You could just scroll through the Smaulgld site and find your charts. So Smaulgld.com, and also I'm on the alternative media platforms like Gab, Minds.com, Steemit, and then, of course, Twitter, Facebook, Google+, and BitChute.
Well, great, Lewis. I definitely think I'm going to get some Smaulgld mugs and a Game Changer eraser pretty soon. I'm excited about getting those products.
They're the best. You can go to Smaulgld.com and get your Game Changer Super Classic and Classic mugs. Check them out. I'm a mug pumper, you know that.
Oh, by the way, I looked at the URL yesterday, goldpumper.com. That URL is still available. That may be something you might want to look at.
Yeah, I do the week review. I do goldpumper.com, silverpumper.com, bitcoinpumper.com, and litecoinpumper.com. None of those URLs are taken, but I don't think I want to populate them.
Excellent. Well, Lewis, thanks so much for coming on and having a discussion with me this week, and we'll talk to you very soon.
Thank you, sir.